So we just talked about the cost flow method. Now let's look at LIFO reserve. LIFO reserve, to talk about LIFO reserve, we need to first talk about something called LIFO conformity rule. So what is this? This is a rule by IRS. So basically, this rule is that if a firm uses LIFO to measure taxable income, the company must also use LIFO for external financial reporting. Please take 1 minute, think about why does IRS have this rule? So if we recall from previously when we talked about the impact of LIFO and FIFO, as you can see here that under LIFO, the firm have lower taxable income, but the firm also have reported lower financial net income. And under FIFO, the firm has higher taxable income at the same time, also higher financial net income. So what can firm do here? The firm can just choose to use LIFO for tax purpose so that it pays lower tax. At the same time, the firm can choose to use FIFO for financial reporting so that it can report higher financial net income. So the purpose of this rule is that it is not permitted to happen. So it cannot happen. The firm cannot just choose LIFO for taxable purpose and FIFO for financial reporting. The firm needs to use the same cost flow method for both. So if the firm chooses to use LIFO for taxable purpose, it needs to use LIFO for financial reporting as well. So this is a LIFO conformity rule. And also a lot of the firms use FIFO to maintain its internal record. So for those firms, they may use FIFO to maintain its internal record. And then at the same time, at the end of the financial reporting period, it is decided it wants to use LIFO for taxable purpose, which means that it needs to use LIFO as well for financial reporting. So now instead of redoing all of the journal entries again, the firm just needs to do one journal entry to adjust the cost of its ending inventory from FIFO to LIFO. And then depends on whether which one is higher, FIFO or LIFO. The journal entry can be either debit cost of goods sold, credit LIFO reserve, or debit LIFO reserve, credit cost of goods sold. And this LIFO reserve, it is a contra account to the firm's inventory account. So again, this is first LIFO reserve that we saw it at the beginning of today's class. So the firm first, it apparently thought is using FIFO for its internal record. So it takes FIFO inventory, the cost of ending inventory from its internal record, and it is making an adjustment to adjust it into the total cost of the inventory, cost of the ending inventory under LIFO. And this is LIFO reserve.